want to continue this discussion about markets and how investors are playing these markets, and we're going to do that with a familiar name and face. Scott Galloway is NYU professor of marketing. He's joining us, and it's good to see you, Scott. Got to start with this question. P.T. Barnum, sucker born every minute, are the people who might have driven this market up, if it's earlier, obviously, before Friday's sell-off. If it's not institutional investors, then it's retail investors. Are they playing P.T. Barnum's game?
Good to be with you, Adam. I think there's a super interesting phenomenon in the markets right now, and that is because Vegas is closed, because sports have effectively been shut down, you might have tens of billions of dollars that are largely driven by a young man's need for a dopa hit based on some form of gambling, finding that the new form of gambling and the new way to feed that addiction or consumption is now in the stock market. So I wonder what it means when, if you look at Robinhood, if you look at Public, if you look at these online trading platforms that appeal mostly to young men, their new account openings are staggering. So either people have suddenly decided they have a new interest in the markets or investing, or they're transitioning capital out of another activity into investing. And I think we're seeing this unnatural sugar high as people look for a new place, if you will, if they look for a new casino. All the quote unquote intelligent money, based on the analysis I've seen, when I say intelligent, that's the wrong word. All the people who do this for a living are on the sidelines and feel like the market's gotten ahead of itself, yet the market continues to climb with what people would describe as retail investors. And I wonder how much of it is because this is the new casino, if you will.
Hey, it's Julie here, Scott. I'm also curious on your take, since you are more of a marketing guy than a money guy per se. I wonder how much you think that this phenomenon has been amplified by the echo chamber of social media. As we know, there have been some prominent voices who have sort of championed so-called day trader and whatnot. How much do you think that has exacerbated the situation of people thinking that they can get in here and make a quick buck?
I think that's definitely an effect. I mean, keep in mind, just biologically, more people are available to day trade and watch. If you're no longer at school, you're no longer at work, and maybe you've received an $1,100 stimulus payment, why not take to Robinhood? In addition, you have a lot of companies and stocks that have become very savvy, not the companies themselves. If I say right now Tesla is overvalued at $1,000 a share, within 3 seconds of me saying that, I will begin getting attacked on Twitter by what I assume are bots from Tesla longs. And the same thing would happen if I said that Tesla is undervalued, the Tesla shorts would come after me. So social media has become, the algorithms have been trained to find controversy, just as they're trained to find controversy around incendiary statements around anti-vaxxers or white supremacists. And when you start talking about certain stocks, it immediately creates a lot of engagement, and the algorithms push that to the top. So I would argue certain stocks and trading is getting an unnatural share of oxygen on social media, which creates kind of the mother of all sports, if you will. The new is the NASDAQ, is day trading kind of the new NFL, if you will?
It's an interesting point. Can I ask you a question from a simpleton myself?
Yeah.
Are what you're saying then, is this the case then why an index fund and a passive index fund might be best for most of us? Because then we avoid the short-term volatility of computer-driven trading, of Twitter-inspired trading, and it's a long-term play if you do that.
Yeah, well, Adam, I'm like you. I know enough to be dangerous, but I'm not a finance professor. My iota on this is Aswapdamotaran, and in general, when you're younger, it's fun. Investing can be consumption, and going into companies that you enjoy as a means of learning and taking some bets with 20, 30, 50% of your portfolio, I would argue that there's nothing wrong with that if you have the time left to make it back. But as we get older, kind of the truisms of investing around diversification and low fees seem to be the only thing that kind of always stand the test of time. And these indices, the S&P 500 is becoming the S&P 7, and that is 7 companies now are worth more than the 400, the bottom 400 in the S&P. So these indices become almost self-propagating mechanisms when certain companies that are doing very well, big tech is doing very well, almost begin to become these companies. I think each big tech company now has a larger market capitalization than the entire FTSE market in the UK. So are these indices really, are they losing effectiveness as a proxy for the health of the market? They're absolutely not a good proxy on the health of the economy. If you looked at the NASDAQ, you wouldn't know we're in the midst of a pandemic and civil unrest. So I almost wonder if these indices are more damaging to our society because they create the delusion or the illusion that we're doing just fine.
Yeah, Scott, really interesting points. And I want to talk about the civil unrest that we're seeing right now. You've had a lot of companies, I mean, pretty much seems like every company now has come out with some sort of statement speaking out against systemic racism. But my question for you is, how do we keep that from just being lip service, especially when you look at corporate America? And I don't think there's a better way of putting it, but the boards are pretty much stale, male, and pale, and as are the C-suites.
Yeah, I think what we're seeing is similar to in kind of the brand to product area. The algorithm for creating value used to be come up with aspirational values around the product and then communicate it aspirational values around a mediocre beer, a mediocre American car, a mediocre hotel. And as long as you were communicating things in a very compelling, interesting way across media, it worked. But within about 0.0005 seconds since 1996, you could find out whether or not that in fact was a good beer, a good hotel, a decent car, and product quality became the new kind of the new thing in vogue again. And I think the same thing is happening with this crisis across social responsibility. And that is Nike kind of represents the transition here. Nike put out this highly produced, very emotional, just don't do it ad. And they were criticized for it because people said it was performative. And it's pretty clear that putting out a statement on a black box in serif font saying that Black Lives Matter is not enough, because within about 0.005 seconds, people can find out, do you have an all Caucasian board? Does your workforce look anything like the America? Does it look anything like your customer base? And companies are rightfully being called out. People are saying, does the music match the words? And I think that the notion of a performative aspirational statements from your PR agency or your ad agency that doesn't foot to what is actually going on in your company, that just as the sun passed midday on the brand age, the sun has passed midday on kind of what I'll call performative social responsibility.
Professor Galloway, Brian Chung here. How about specifically with regards to the tech industry? What was really interesting was seeing Snap and Evan Spiegel kind of navigate this, and their stance was that we don't want to release our statistics on what the composition of our company looks like because we worry it will perpetuate the systemic racism that exists in Silicon Valley. What do you think about the role of transparency in companies saying exactly what their diversity numbers look like, and whether or not that attitude, I guess, from Snap is really valid for what Silicon Valley is trying to deal with here?
I think, Brian, it's hard to argue against transparency. And the reality is that tech is still largely, the tech community is still got real issues around diversity on a lot of different dimensions. So I think it's very difficult to argue that you are helping the cause with a lack of transparency. I don't think that statement will age well. What I do think will age well, and again, going back to Nike, because I was critical on them, was they then, a couple days later, announced a commitment of $100 million, which is a lot of money even for Nike, to support causes that were fighting systemic racism in concert with Michael Jordan. So this is a new era where, the music has to match the words. If you think of your character as a function of the sum of your actions as opposed to the sum of your words, we have decided that the new litmus test for character across corporate America is their actions, not their words. There's also two constituencies here, and that is the communications to your internal employees, which quite frankly have become the most important stakeholders now, and then your external communication to your workforce. And right now, I wouldn't say for the first time, but the internal communication seem to be as important. A lot of employees, and it does feel generational, it's striking and inspiring how passionate people under the age of 30 feel about this. It feels to me, and I know this is an ageist comment, that as you go younger, the passion just gets greater and greater around this issue. So companies are all of a sudden just as focused internally on their communications as they are externally. But to your point, just back to Brian, your original question, I would say that statement will probably not age well, and I think it's a bit of a dodge.
Hey, Scott, in defense of Generation X, I would just say that the passion is somewhat there, but the execution, we don't think we're invincible. So I do want to ask you about this, though, in regards to colleges. What are the plans at NYU for returning this fall? Have you heard anything, given the fact that we're still in the middle of a pandemic?
Yeah, well, so far the official statement, and I want to be clear, I don't speak for NYU, I work there,
Right.
but I don't speak for them, is that they're going to attempt to reopen and be very focused on distancing. And I know firsthand that the leadership at NYU are these thoughtful, empathetic people who are working around the clock. I'll speak more broadly to education. They have absolutely no idea. And until there's more visibility around what happens with therapeutics and vaccines, bold statements from presidents, the Brown president, the Notre Dame president, in my opinion, are similar to a CEO talking up their stock in the midst of a disastrous earnings call, trying to convince people not to sell the stock. So when you hear a university president make a declarative statement that we're welcoming people back in the fall, that is Latin for parents, send in your money now. Because what you're talking about is an infrastructure with exceptionally high fixed costs. And if 10, 20, 30% of the students don't show up in fall, you could have that university start a death march and go out of business. So when a university president says, we look forward to seeing you in the fall, they have entered into consensual hallucination with their CFO, who has said, get those deposits in. So the honest answer across any university is we have no idea. The industries that have been hardest hit are the ones where, as a function of consuming the product, you sit shoulder to shoulder with other people, sports, restaurants, movie theaters, and come September 1, we're about to see, in my opinion, the mother of all disruption happen across universities across America.
Just quickly, Scott, would you want to go back and sit in front of a classroom full of students right now? Or in September?
I'm going to do what they asked me to do. I feel very loyal to NYU. They've been exceptionally generous with me, so I trust them. I trust them to make the right decision. Am I concerned at the age of 55 about walking into a room with windows that don't open? Yeah, I'm concerned. And I think that what I believe is the people who make these decisions are actually smart and empathetic. And if I had to guess across every university, there is not going to be a traditional opening. We are going to revert back to Zoom, and we're going to end up with a series of small and big tech solutions to remote classes. And this will pull the curtain back on higher education, such that people realize that my class, where I teach 400 students at $7,000 each, while I'm good at what I do, and some days I'm even great, it isn't worth $2.8 million. And that recognition and realization is happening across 105 million households across America and the 20 million that are sending their kids to some form of education. We are overdue. We have stuck our chin out, and all COVID-19 is doing is pulling the curtain back on one of the great morally bankrupt infrastructures we have in the US, which is academics, including myself, preying on the hopes and dreams of middle-class Americans who continue to saddle tons of debt on the household so we can enter into this caste system. So come September 1, in my view, the disruption begins, and it couldn't happen to a nicer group of people.
Scott, quick heads up. We're going to invite you back.
By the way, that's going to get me all
we're going to
sorts of
use that
popularity.
soundbite. That is what we're going to start in August or September to talk about how the university system is being restructured. Got to let you go now, but you're one of the most thoughtful and insightful people that joins us, and we appreciate it. All the best to you, Scott.
Thanks, guys. Stay safe.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.